Hey guys, David here. The market's looking really interesting at the moment, aren't they? You see, there's threats of interest rates and there's some Russian dude just gallivanting around eastern Ukraine for funsies. It's looking exciting. However, I don't think either of those events are going to cause stock market crashes, but that's just my personal opinion. It's not like American banks are going insolvent or anything like last time. In fact, a 12% correction on the S&P 500 is not together all that uncommon. The point of this video, though, is to show you how big players like to screw little players. It's going to show you a few examples on the charts of where, give you a few ideas to think about how the big players might be using everything we're taught in trading against us so that they can buy in at a better price. I'll show you a few examples. Let's go to the charts. First off, let's look at how common stock market crashes actually are of roughly 12%. So here's the current one at 13%, and I drew a few more. Back in the recent era, we had a lovely 10% sometime around where the US election was. This one is the Rona crash, so we're going to ignore that one. But not too far before, we had this lovely 20% crash that went straight back up. That was well before the Rona. And immediately before that, we had an 11% crash. Back here in 2016, we had a lovely 12% crash, which then went again all the way down to 14%. And we had a lovely 10% crash in, when are we, 2014. And 2011, we had a lovely 20% crash and another 15% crash in 2010. They seem to happen all the time. It doesn't mean that we're getting a lovely 58% crash just yet. You know, like I said, there's no American banks going insolvent. Not yet anyway, so let's keep an eye on this. Like, things could deteriorate and this could be the end. It could be an entire Rona rally correction and it's going to go much lower. It's possible. But today, we have this massive green candle right at the bottom, causing amazing bullish divergence on the RSI and will probably form on the MACD as well. It could be a really good entry. Just a thought. What I wanted to show you today was how the big players like to screw the little players. Let's go back a little bit to 2014 or 2016, a really good example. You might notice that right at this point, the market seemed to drop just a couple of percent lower after making a lower low. It's from a practical point of view, where do you think all of retail's stop losses are going to be? Below this point, right? In this gray zone. Where do you think all the short sellers are going to sell in? Pretty much here. Where are all the retail traders going to do that? So the highest amount of volume, the best place for the big players to pick up the capital when it's not a crash, but actually a plausible place for them to get in, the best place to get them entries would be in here. And you can see price wicked down and then went straight back up, and then it wicked down a little bit more consolidation, a lot of buying before it went back up. Let's look at another really good example. We have a lovely, in, what was this, 2011, a lovely wick just below for a whole bunch of buy orders. In fact, we have a whole Wyckoff distribution pattern. That's what Wyckoff distribution patterns are about, and accumulation patterns. And here we go, it's accumulating with a lovely spike just out the bottom to take all of retail's stop losses and all their sell orders, and in they go. Back in 2000, it happens in the other direction as well. 2007, price just spikes above and then quickly reverses. That's kind of over a long period of time. That's July all the way into October that this happened, and price just spiked above and then crashes away, forming the 2008 crash. What happened at this point? All the papers would have been printing, oh, it's all-time highs, and all the retail traders are going, oh, the market's amazing, and that's where they'll be buying. Nobody's taking profit there. Everyone's buying. There's entry orders there. No take profits. Only the big players are taking profits at all-time highs, right? Everyone else thinks the market's going higher. And look what happens. Yeah? And then below that, the dip buyers. But that's a different story. We'll talk about dip buyers another day. Something interesting is you might note that the 2008 financial crisis wicked below 2001 by a reasonable amount. But it wouldn't be a good order spot for big players to buy in, would it? Do you think? Maybe? In fact, we have a bounce and then an accumulation period just here on the 2008. So that's where the big players would be buying everything. Let's check out some other stuff if you don't believe me. You can go buy products which tell you where stop losses are on MT4. Right? Indicators which tell you where the stop losses are. Other people's stop losses. In fact, you can find where people's buy orders are. There's another product in here that talks about order clusters, and you can buy order clusters. Order book, FX SSI order book is the one. Open trades and pending orders of retail traders are displayed as a two-sided histogram. You can buy what other people are doing. In fact, there's whole articles in Forex trading on how to find stop loss clusters on the chart. Now, do you think that maybe every single retail trader is taught to use the RSI the same way, is taught to put entries in the same way? Yeah, we really are. Do you think big players, the guys who need to make a lot of cash, want this information? Yeah, they do. Let's jump across to the Bitcoin chart. We all know that Bitcoin has had a lovely 50% correction now, and it's a really good time to buy. Well, what do you think at the recent all-time highs happened just here? All the newspaper articles were printing about how the market is going straight up. We're at all-time highs, how this is the change. Yet we barely tipped past the previous high and then it sold off sharply. Who was selling right here? Big players, forcing the market down, causing stop losses and liquidation events like this one, forcing the market lower. They keep forcing it lower. Who's selling? Retail, right? Retail's selling down here. Big players are buying up here. Up here, big players are selling, retail's buying, right? Big players want to buy in at a lower price and sell at a higher price. That's what they do. Look here, it happened in the amazing April-May Wyckoff distribution pattern. False breakout, breakdown lower. Big players put all their sell orders here and then the retail. Sure, it's not as simple as I'm describing. What I'm trying to explain to everyone right now is the markets are here to screw us. Screw retail. Use that in your trading. Use that knowledge. So since this channel is not about trading, when is the best time to buy? Simple answer. For Bitcoin, in my opinion, it's when it's below the 50% mark. In yesterday's video, if you bought in 2017 below the 50% mark, you'd have bought below $10,000 and been accumulating dollar cost averaging in during this period, which would have been insane. You'd have made so much money. However, if we look at the S&P 500, currently only 12% off its all-time highs. Yeah, I'd personally like to wait till it gets to about a 20% correction, but it's gone up massively. It doesn't seem sustainable. It's possibly going to go sideways for a long period of time. Like that. Like, when would be the best time? After a really sharp sell-off. Even if you bought in here, which would have been a 20% correction, you still would have made a killing after you'd been back at break even after 3 years. and made an absolute killing from there. So yeah, dollar cost average in below a certain pullback point. Maybe 20% is a good number to dollar cost average in. What happened with the Roni Rona? If you dollar cost averaged in or bought the dip here, you would have made a killing. What causes a stock market crash? Well, let's have a look. So this is the S&P 500 on the weekly chart. And yeah, look for distribution patterns. Look for ways where big players might actually get out by finding everyone else's stop losses and take profits and where all-time highs are. And then notice it sells off sharply, only a little bit though, before coming back, right? But the most important thing in my mind is finding news worthy of an actual stock market crash, like Lehman Brothers going insolvent, or a virus causing massive shutdowns around the world. But then, if you're at that point where you're like, oh crap, it's too late and the market's already down over 20% in the stock market, then I don't think it's a good time to sell anymore. It's time to buy, right? In my mind, there's a point where there's a time to sell and there's a time to buy. In Bitcoin, when it's down below its 50% mark, it's time to start buying. When it's all-time highs, that's when you start selling. So don't sell your Bitcoin yet, guys. I'm not. I'm looking at buying more personally. I hope you found that useful, guys. Remember, I don't exactly think that some crazy Russian dude gallivanting around the Ukraine is going to cause a massive stock market crash and massive sell-offs. However, is the stock market due for one? Yes. Is there a possibility it might happen? Yes. Could companies go insolvent as a result of the Roni Rona and money flow problems from that point, and have only been kept alive by government stimulus until now? Yes. So it could still happen. However, it's not going to be the Ukraine that does it, I don't think. That's my opinion. Either way, guys, I hope you got an idea of how the big players play. I'm going to link a few videos in the show notes. Have a look, see what you think. Anyway, enjoy, guys.